Hello viewers, welcome to Census 360 Investor. In today's video, let's take a look at the markets, and within our 360-degree framework, we're going to be focusing on the markets. And a quick word about the disclaimer. So please pause, read through this. Channel providing financial advice. Thank you. So without much further ado, let's begin the show. And so I won't go over this slide since I covered this a few days ago. And I am going to start introducing a little bit more about breadth and market breadth. So let's take a quick peek at some of this. Um, so this is the bullish percent on the Nasdaq 100. So up here we have the index, and basically what this is looking at is the old pointing finger charts, and then it tracks to see how many of the ones that are in the Nasdaq 100 constituency are bullish or negative, then it creates this index from them. So there's a couple of things that we watch out for. This is one thing. Typically, before the market pulls back, it gets above the 70s level, and then when it comes back down, it's usually a negative sign. And then on the reverse, we're looking for the opposite reaction pattern to this at around 30s. So around 37 right now. Ideally, you want to get below 30 and then make that move up. But sometimes you don't get that far down. So you're looking for a window. So our window we're going to look for is where we are now to about 42. If we reverse above that, then that means the chance that we're going to have some kind of short mini, at least some kind of mini move up to the upside. And we can see here, against the S&P, our S&P kind of topped out, around here, and that coincides with this. Now we're kind of trying to find a bottom, which may coincide with that. And then one more item here, which is the percentage of stocks in the S&P 500 above their 50-day. And it's getting close to single digits. We came close to it a few days ago, and we moved up a little bit now. But usually when this gets into single digits, we're kind of close to a turn. So that's a couple of things to watch out for from a breadth perspective. And then all of this has to be put together because no one single indicator is has the magic touch. So we have to look at a body of these and try and figure out what that's telling us and what the overall picture looks like, especially when we start looking at the charts. Okay, so here's another one. This is the new highs, new lows. We can see back here in July, it was getting frothy, and indeed, the July swing highs are the current highs. And then more recently down here, we in October, around October 3rd, we got pretty low in terms of the new highs, the differential with the new lows, which was actually negative 400. And so that's usually close to a turning point. And so we have improved the last few days, but again, we need to see a body of work in this set of indicators that kind of gives us a general direction. So we don't base it off just one or two. Okay, so I just wanted to introduce those. I'll introduce a few more in the next slides. But what we'll do is we'll go to color chart and take a look from there as we move forward. Okay, so this is a busy slide. So basically, I'm not going to go through it all of the details in this one video. I will be using this in future videos, so we'll build up on the knowledge. But basically, let's just have a quick look at some of these. So here's the S&P 500, and we in the blue line is the 200-day. So we can see, we had a nice little run above it, and we were also above the 50. Now we've come back down, and a couple of things to watch out for are, this lower. We made a high, lower high, and now we made a lower low of that low. So looks like there is a beginning of a young trend starting to emerge, but it's sitting at the 200-day. So let's watch how that action occurs. The other thing to watch is As we look at the VIX, which is down here, the VIX is sitting just below 20. And so once this gets above 20, and if that coincides with the S&P 500 dropping below the 200-day, then that could be indicative of some more bearish action, which we will wait to see. And then the advanced decline line on the 9Z, we can see that's also moving down, and just tracking, putting on a moving average to smooth it out a bit, we can see it's a period of weakness coincides with this. And if we look at the same advanced decline on the S&P, we can see that's coming down as well. So a lot of weakness showing up on this side. The McClellan oscillator is bearish, and so the new highs which we looked at on stock charts as well. So this is the alternative new highs way of calculating. Yeah, stock charts one is just a differential of new highs minus new lows. This is actually a ratio, and we can see points on this like here when it kind of gets below that 15 level, is usually marks some kind of a short-term bottom. So we can see that one moving left over this higher one. Then if we go over, yeah, October, we can see how that helped us at least pinpoint a potential turn. And so as we look at it now, we're in the zone for a turn. So if we look at this in prior history, look at the pull down, the fact that it's near support, and so there are some indications that we may be close to the end of this correction, in which case it will just be a pullback in a larger uptrend, and then if it resumes from here, if it finds support here, resumes upward, then that will just confirm that the pullback thesis. So I'll build on some of these other ones move forward, but I just wanted to kind of begin sharing a slightly different view on the markets here. So let's finish up by taking a look at the Nasdaq, and then we just come back out for a second. So we're still looking for that follow through day now, and today was a kind of a slightly positive day in the sense of the chart, the candlestick pattern. Although we did finish slightly lower than yesterday's close, but we can see very tight body, long tail to the downside, a very little wick on the upside, which is constructive. So if we can build on this and start to move up, we may be able to find that follow through day the coming days. So we're still in the search for that, and so that's something else to watch out for, is the William O'Neill follow through day, which can be an indicator of getting some level of confirmation as to where this market's going to be headed. Okay, so let's go back and finish up. So that's it for this video. So a quick update and introduction to some additional indicators, which we will build on and use those to help us mostly at turning points when we're looking for when the market's frothy and we may get a turn to the downside out of correction or back. And also when the markets are in correction, then we're looking for a turn to the upside, either a bounce or a reversal and a resumption of the uptrend move. So that's it for this video. Thanks for watching. Thanks for listening. I hope you found this useful. So I will see you in the next video. Goodbye.